Welcome back to Mike on Money, everyone. My name is Michael LeBlanc, Director and Senior Portfolio Manager at Canaccord Genuity Wealth Management. And thank you, everyone, for joining us here every week. Every Tuesday at noon, we do our live broadcasts of everything we saw last week in the markets and everything we see up and coming. And we're also going to take a look at the kind of the global recovery, kind of the synchronized global recovery we're experiencing right now in the economies, and take a look at what that means and both opportunities and where to look for investing for this year or for the balance of 2021. And always with what we cover on here, remember everything is for information purposes only. Always do your own due diligence or reach out to a professional advisor. And you can reach us at mikeonmoney.com. That's our portal where you can find all our videos, all our educational content, but most importantly, you can get a hold of us either by phone, email, or book an appointment with us directly there. And it's always, send us in your feedback. Love to hear any topics you'd like us to take a deeper look into and see how we can make these more tailor-made to what you're looking to hear about. And of course, if you have any questions, feel free to send those in. If you're watching replay, go there and send in your questions. If you're listening to the podcast, same thing. If you're watching us live here, remember you can always click on that Q&A button, send in your questions, and we're happy to cover them here today. If we don't get to them, as I tend to go long on these things, I will definitely follow up with you afterwards with your answers and follow up on any other areas or questions you might have. So with that, let's take a look at what's going on in the economy. This week, we're looking for the U.S. trade numbers, both in Canada and the U.S. So we're expecting those out later this week. I don't think we're going to get any surprise on those numbers. They should be lower than last month, especially in the U.S. But that's, again, just that surge of reopening starting to level out. And again, don't be afraid of those numbers slowing down a little bit. What we're looking for is the trend, not necessarily the month to month, as the reopening, depending on what areas of the world reopen, what areas of the economies reopen, we are going to see a surge as each of those take place over the next 6 to 8 months. We did see the futures kind of have a bit of a pause. The market's out there looking, just trying to get some idea around where the trade difference is going to end up, but more importantly, kind of watching for the U.S. inflation number. The U.S.'s inflation number has been below their 2% target now for the better part of 10 years, and whether it could jump above that or touch on that the top end of the range in the recent months. Again, much like we saw in Canada. Remember, Canada peaked at 3.4, above the 3% range that Canada targets. But we expect that in the reopening. We don't expect it to stay there. We'll talk a little bit more about inflation when we talk about global markets. But we do expect that surge, kind of a bump up in the short term, and then leveling off for the rest of the year. Stocks have rebounded in the last couple of sessions, though, with the index hovering close to record levels as optimism for the reopening and the economy's economic growth for this year continues to be strong, both in the U.S. and around the world. Down in the U.S., the J&J vaccine, we kind of stopped talking about it for a while. The drive has definitely stalled in the U.S. after they put it on pause for safety reasons. Now, they did release that pause, but given the numbers or the large number of people that have already been vaccinated in the U.S., and we're seeing this in Canada as well, where the J&J is non-existent. Where now the supplies of Pfizer vaccines and the other vaccines, AstraZeneca and Moderna, are outpacing kind of the demand. There's been no push to introduce the J&J vaccine, which once an original rollout in the U.S., was very optimistic. It was the single dose vaccine, but now that everyone's going into their second dose, it's become a bit irrelevant, and they have 21 million doses sitting there going unused. Luckily, the U.S. has started this global effort to share vaccines with the world. Canada's under a bit of pressure to join that, as our vaccine numbers, are well over 70%, in BC here 74% of first shots anyway. And I think Canada will definitely jump on that as soon as we get into, get through this second shot phase, as our population won't require as much stockpile anymore. Skin in the game. Video chat apps have been touted exclusive AI features for a long time. And they throw the name around of intuitive or integrated functions. But now we're seeing some of the ventures like Google and Cisco really pushing for inclusive. And when we talk about this, just talking about the AI features working for minorities. And this has been big in the press, where everything from facial recognition to auto lighting hasn't worked well for minorities. And the big tech giants have taken a lot of flack for that. And of course, as we go into late 2020 and obviously the popularity of the video conferencing apps, as I'm using one right now, is getting bigger and bigger. These big companies are working really hard to fix their AI to be more intuitive and more inclusive in order to work for all races and all minorities around the world. From lapsing job benefits to full stadiums, June is going to be a big month in the U.S. recovery. The reopening's happening. They're bringing back the full stadiums, they're bringing back all the sports. But also the job benefits, where the federal government had extended the EI benefits down there. We've already seen about half the states cut their benefits back, and the remainder go back this month. So, all those extra benefits are going away, and everything's kind of reopening. Now, on the flip side, the job front in the U.S. is strong. There's a lot of jobs out there. In fact, they're having trouble finding people, especially in certain sectors. We're seeing that up in Canada as well, especially when we talk about hospitality and restaurant businesses, where they let go of all their skilled staff, and they went out and found other jobs, other careers, and now they're trying to rehire back into those positions again, and they're finding a big shortage, especially around the experience side of things, as a lot of those more experienced workers went on to find other opportunities, and obviously they're happier where they are, and they're not looking at coming back into those areas that they left. Wall Street's trying to use some options. So, this talking about what they call the meme stocks, or the Redditors who went on to the the Robinhoods and started trading. This started with GameStop a while back, moved on to AMC. BlackBerry's been caught up in there. There's been a lot of other stocks that have been targeted by these online traders who kind of see themselves as a bit of protesters attacking the big Wall Street shorters, right? So to recap the story really quickly, AMC, for example, this is the theater company. So if you go to watch movies in the theaters, they're the largest theater owner in the world. Obviously hit very hard through the pandemic. Their stock fallen down to roughly $10. And some of the shorters out there are saying, hey, they're going to have a hard time coming back. They've lost all this money. The movie production studios are now using their streaming service to go direct to market, cutting out the theaters in a lot of cases. So even when things reopen, they're not going to get full get back to where they were as far as revenue goes. And on top of that, over the last couple of years prior to the pandemic, had spent a lot of money in upgrading all those theaters to this VIP big experience, and now are the viewers going to come back? So the Wall Street bets were basically going against it and shorting the stock out there. And then what ends up happening, you have this surge of volume coming in, driving up that stock, and what you get a short squeeze, right? So they start to lose money on their short bets. Now, what a lot of people are not talking about, and AMC is a good example. So like I said, I was trading around the $10 range. It has shot up to the $50 range. Obviously, that's a big jump for a lot of people. But what ends up happening, it's not all these meme Redditor buyers out there that are driving that up. What happens is they move that stock up a little bit from say $10 to $15, but then all those short traders out there go and cover that short. So that means they buy back the stock that they shorted. And that's a ton of buying volume. And it's a lot of their volume that's driving it up to the $50 range. Now, unfortunately, those protesters or those meme stock buyers are, are jumping on and they're getting it at the $50 range. And as everyone knows, the stock market is a zero sum. It means someone bought it at $50, someone sold it at $50, but if it goes back to 10, whoever bought it at 50 is left holding the bag. And that's what really concerns me around this is the people buying it up there aren't really realizing what's driving up that volume. Now, of course, the shorters are getting smart too. Instead of going out and shorting the stock, they're just going out and trading options. So they can use options that simulate a short sell without actually selling the underlying security. So what ends up happening is, one, they're not declaring a short. So now your meme stock activists aren't out there piling onto you. You're not adding volume, and you can cover that that option by buying the opposite. So if you sold, you bought a call, you can sell a put, you cancel it out, and there you go. You've washed your position with any profit or loss in the meantime. So they're switching their tactics to offset some of this activity. Obviously, it's something we're going to continue to watch. Given the amount of times we've seen, whether it be AMC, as I mentioned, GameStop, the BlackBerry, have, high double digits, using 20-25% moves in one day. AMC, we saw 70% move in one day due to this activity. Not something I think people should be out there trading on, but it's happening out there, so you should be aware of it. What now that we talked last week about the G7 passing the foreign global tax deal. What now? Of course, the U.S. has to pass it, and that's going to be a challenge with the Republicans in the Senate. But as they move through that, they're paving way for some broader deals and to really reshape the cross-border taxation for years to come. I think this is actually healthy. We saw an announcement out the other day. Just on Elon Musk in 2018 paid $0 in tax in the United States. So those types of things that they're trying to try to offset, just have a more fair playing field. Especially in the United States, where you've got these big super cap companies, very large companies with tons of cash on their balance sheet up to I think Apple's last balance was over $200 billion on their global balance sheet. Paying very, very little tax. And of course, they want to get the $6 trillion stimulus package through for infrastructure improvements, new technology investment, all those things. Well, that's an easy way to pay for it without damaging your economy. So given that the G7's on board with it, I think this is a positive thing to come. Global banking regulators are stepping in closer on the crypto capital rules. I've talked about this many, many times when we're talking about Bitcoin and cryptocurrencies. The global banks do not like the fact that it's unregulated. This is why crypto or any cryptocurrency will have an absolute challenge to become a standard currency because the governments want to track. Even if you think the simplest portion of what they want to track is money laundering, but then the real thing that they want to track is taxation, because that's a big source of revenue they could lose if transactions were happening and they weren't able to track it to enforce taxes. So we're already seeing the U.S. I think that I saw El Salvador was talking about using Bitcoin. Doesn't matter which cryptos, but they're all talking about, a lot of them are talking about coming out with their own cryptocurrency. The UK is now talking about coming out with their own version of the pound in crypto, but with all those regulated rules around it. So we're now seeing that as the crypto market heats up, we're now seeing the central bank saying, forget it, we're going to put regulations around this. And of course, China has been the first one to do that, and other countries are going to, will follow suit because they need to. Big IPO coming out, the banking app called Dave. is going to go public on a $4 billion SPAC. We talked about SPACs a few weeks ago in our video, special purpose acquisition companies. And this is led by Mark Cuban from Shark Tank. So it's one of the biggest IPOs I think that's come out of that show for sure, or that process. And we'll look at how that does coming out this week. On the vaccine update, I mentioned BC, we've gone over the 74% of adults who got their first. We're well into doing the second round. 72% of those over age 12 have already gotten it. Pretty much similar across the country. Some provinces lagging a little bit. You know, Manitoba had a spike in cases in the last couple of days, which has been good. But as the vaccine goes, continues to roll out there as well. You know, they should follow the same stats the other provinces have been following. You know, BC, you know, June 15th, we're definitely on track to meet our targets to go for our second round of reopenings. You know, the travel ban lifting and larger groups getting together. So that's progressing really well. Ontario's talking about their, you know, reopening a lot of things, you know, and good for them because they've been in, you know, real lockdown with, you know, I forgot through the fact that we lost our indoor dining, but we still had our patios open. You know, they never closed. And, you know, I talked to some people in Ontario, and of course, they had nothing. Nothing's open. They don't even have, you know, shopping indoors. You know, it's all curbside shopping there, which we never lost, you know, the ability to go into most stores here in BC. So forgot how fortunate we were being through all this in BC. But anyway, it's getting better. And hopefully we're going to see those reopenings continue on pace through the summer. And by the end of the summer, assuming we stay where we are, we will have all restrictions lifted. I know BC's got September 1st as the target date. And I've also noticed in Quebec, they're also progressing. They reopened the patios a couple of weeks ago. They're talking about the in dining and schools and everything opening normally in September. So all positive on that front. You know, globally, things are getting better. India's numbers are coming down. UK, of course, leading the charge. There's a lot of talks now between countries of lifting the travel bans, and more we're seeing certain countries being exempted if you have proof of vaccination, and that's going to lead to, you know, the vaccine passport or whatever we want to call that, or whatever form that's going to take. Obviously, it's not about local countries, but it's what the global countries are going to agree upon as far as that goes. The other good news on that front is in 2021, it is estimated that we will produce 12 billion vaccines. So, you know, if we look at the global picture, and remember, this is a global issue, talked about it before, we can vaccinate everyone in Canada and eradicate it in Canada, but if the variants can continue to mutate in other countries, our vaccine might become useless. So, you know, the importance of vaccinating around the world. So with 12 billion, you know, that's 75% of the world having the two vaccines. So that's very positive. Positive news that we're on track to create to have that much in vaccine production, and very likely into 2022 going into a surplus. So we'll see how that translates to the healthcare stocks. We're going to talk about that, but as far as the reopening goes, very positive. Coming up in the US, as I mentioned, we're looking for the trade deficits. We're likely to narrow down to about 69 billion from March, where we saw 74 billion. Again, just that surge of reopening. The job openings and labor turnover survey I mentioned going really well in the US. We're also going to see the executives at Colonial Pipeline talk with the US Senate and Homeland Security just regarding to the cyber attack on the pipeline. You know, there was approximately 2.3 billion in cryptocurrency paid to, you know, avert that disaster. And I think I read that they seized that money, or seized that currency, and a full investigations going into it. Facebook and Instagram will start their virtual Creator Week event for social media creators and company executives. So if you're an online star, enjoy your Creator Week, and we look forward to seeing your appearances there. The US, the FDA has approved Biogen's Alzheimer's drug. Now, the stock has soared a bit on that announcement. The big thing about this drug is it's the first drug that actually treats the cause of Alzheimer's. All the other drugs out there for Alzheimer's is to treat the symptoms. This is the first one out there to create or treat the cause. And one thing to keep in mind on this is they actually don't expect it to be that effective. You know, it's still in test. This was a an emergency approval, pre-approval. It's got all these clauses on it as far as the FDA approval goes. Nothing negative about that, and nothing negative about the fact that this isn't, you know, a straight up cure. The very big positive to take away from this, it is going to drive a ton of research around treating the disease itself as opposed to the symptoms, which we've not had a lot before. So that's the positive to take away here. This is the first time that the FDA has approved one for treating the disease itself, and that's going to drive a lot of other drug manufacturers to invest and start to build out that area of the market. So very positive news, both for those who suffer from Alzheimer's, but also for the drug industry. Google has taken a big fine in France over antitrust on their advertising practices, and they're making a bunch of changes. We covered this early stage when this was raised. Not a ton of surprise here, you know, just about favoritism and how they rank things in their logarithms, you know, using some unfair practices. So just leveling the playing field there. We've talked, there's a bunch more antitrust out there on a lot of the big tech giants, whether it be Facebook, Amazon, or even Apple. So I think we're going to see a lot of these antitrust suits kind of settle out in the next couple of years. If you have an Apple device, especially a phone, they've added some privacy protections, and it also enable you to store your ID on your phones. So, you know, your government issued ID, be able to store on there if you wanted to. But the big thing is the privacy protection. We talked about, you know, Facebook was suing Apple over this because it allows Apple users to block apps on your phone from tracking you. So if you've opened an app since the update went out, you've probably seen the warning, this app tracks you when you're not using it. Would you like to allow it or not allow it? So that's the new feature. And for a lot of those apps and a lot of data compilers out there, that's a big problem, or not a problem. You know, it's going to cut into the revenues because they take all that information from all the different apps that you use, and they track you. And it's not about, you know, where you are is what they're worried about. It's your habits, right? They're marketing to your habits. So I think I used the example before where, you know, a father was taking his kids out to a movie. He went on the app, he bought some tickets, he looked at the area, he went to get ice cream beforehand, and another app tracked his location. They knew he was at the ice cream store. Then afterwards, he went to the grocery store and then went home. And then they put all that together, and they now know, you know, the area he frequents, you know, what type of movies they like, what areas they go to the movie theater, you know, that they like ice cream and where they hang out. And now advertisers can target their ads to you based on that usage. So, you know, that answers the question where we think our devices are listening to us all the time. You know, when we go into a store and then all of a sudden they get an ad from that store, well, they are listening to you, but they're listening through all those location tracking. And so you can turn those off now, or Apple gives you the option to turn those off. AMC and other stocks, favorite jumps. You know, we talked about the meme stocks. As I mentioned, they had that big jump. You know, almost 70% in one day, and it continues today. It's pretty flat today, but still holds up at the $50 price range. Blackstone, the institutional equity investor, is taking QTS Realty Trust private in a $10 billion deal. This is a kind of a wave of companies going private. We talked about D&D last week, who only went public late last year and now are being taken back private again. So this is an all-cash deal. going private. We'll probably see more of those as institutional investors find value out there in buying these companies, amalgamate in different vertically, different verticals into the industry, and then roll them back out public for a higher price down the road. Up in Canada, as I mentioned, we're looking for those trade numbers, and again, we're looking for it to narrow a little bit from March. Canada's Endeavour sets a dividend policy ahead of a London listing. So Endeavour Mining, we talked about materials being very active right now. Endeavour Mining is expanding to the London listing, and they've actually put $500 million aside for shareholder returns through to 2023, just to promote their dividend, and they're listed on the London Exchange. So that was an interesting move by them. Canadians Nutrients are going to boost their potash output on strong global demand. Obviously, with the reopening and expansion, farmers, the growth of produce required around the world is increasing constantly, and they're increasing the potash production. I don't love this area simply from the standpoint, there is no shortage of potash. We have access to more potash than the world will ever need. It's just a matter of how much is mined, and kind of just inventory controls. So the price is basically set by the producers, by how much excess that they create, and sometimes there'll be a temporary surge in demand, but the producers just go mine more, and then they have more for the next round or for the next grow season. So it's not an area I like to overly invest into, so I'd be cautious about jumping on it now, because the price would have spiked on that announcement of increased demand. ID verification startup Trulio has raised another 400 million, and their value now, the company, at 1.75 billion. This is a Canadian startup, so it's a great story. So they provide global identification verification for online use, and the venture capital firm is now growing to almost $2 billion in valuation. So good for them. And I've been following the news, of course, here in BC. The Save Fairy Creek protests continue. The battle over Canada's western ancient forests has been a long-running battle between protesters and logging companies. And of course, with the demand on lumber right now, the logging companies are being very aggressive about using their inventories up, or cutting the inventories up to get it to market. And there's a big fight, especially between the protesters and the logging companies over on Vancouver Island. And you probably see that in the news on a nightly basis. On the foreign exchange front, we saw the dollar hedge a little bit higher against Europe, still staying pretty much within its range. The Canadian dollar sticking above 82 at 82.58. I think last week we were 82.70 something, in that range. So here it is, folks. Bitcoin is now on our Forex exchange chart. So cryptocurrencies are becoming more popular. I couldn't believe when I saw I saw the news feed had Bitcoin in our main Forex feed. So I've put it in there. It did drop 7.6%. Still staying near its 33-week low around 32,000 US. Obviously on those talks of regulations, especially in China. On the oil front, we did see oil drops below the 70 mark, still holding above the 69. Just a little bit of concern that the reopening won't be as aggressive, or the demand of oil won't be as aggressive as thought, but obviously still hoping for a demand surge as everything starts to reopen on the global front. Copper edged a little bit lower from its highs, but still holding up there, as we saw the China demand slow down a little bit over the last 3 months. So now let's talk about this global synchronization of the economies and this recovery that we're in. Now, I've talked about inflation and why it's really important to keep a very close eye on it. But I also mentioned that we were going to see that surge, which we are seeing, but it shouldn't be a serious problem, and we don't want it to become a big concern before before it is a big concern, as I mentioned, probably after first quarter 22. And there's a lot of reasons why, despite all this growth, if you look at the markets that we've come through, we've seen, the amount of stimulus that the governments have pumped into the markets. In fact, of the total economy, I think in the US and the UK, about 10% of the growth in the economy was just by government. But this stimulus is a little bit different than other stimulus or past stimulus packages. So the money that's been, given out by governments is not so much a gift. It's actually replacing something that was lost due to the shutdown, right? We shut down the economy. That money was lost. It wasn't created. So it's not a transfer. It's actually a replacement. So think of it a little bit different in that standpoint. I mean, it is going to bring inflation to a head at some point, but don't think about it as being too soon, because it is a different animal this time around. We also have a lot of different things happening that normally drives inflation. If you really think back to the 80s, where we had hyperinflation, what was driving that? Well, that was the baby boomers, right? We had this massive group of people moving through into their spending years, into the labor market, but right now we have pretty weak demographics on a global basis, or certainly weaker than we did back then. So that's actually slowing the impact of inflation as we go into it. On top of that, we have low birth rates globally. So the replacement of the population isn't happening at the same rate we had in previous inflationary times. So both those things are also slowing things down. And also, if you reflect a lot on 2020, we jumped on technology, even more so than we would have, embracing technology into new sectors and new areas. And that means productivity enhancement. So productivity enhancement keeps costs down. So that's going to slow that inflationary turn as well. And then, of course, we all shopped online, and the online competition is driving prices down as well, or at least keeping them lower. Yes, there are some surges in inflation as manufacturing had to restart up again and supply chains had to get re-going, and that's that surge we've been talking about. But as that levels off, there's a lot of factors there slowing that inflation down. So it is something we have to absolutely keep on our radar and keep track of it. But for 2021 and into the start of 2022, we have all these other areas easing that inflationary pressure, so it should not be a big concern to deal with. So why can equities keep rising? As I mentioned, we've seen them surge up from their March lows in 2020. How much more can they go? Well, there's a lot of things out there, pushing that, and we've talked about that as well. Is the cost of borrowing, or the liquidity we have out in the market. There's massive amount of liquidity in the market, with low interest rates, government treasuries driving that, and none of that's going away in 2021, right? All the federal governments have basically said, we're not, turning this off. They're saying 2023, maybe that's aggressive, but definitely into 2022. So there's a lot of push for equities to drive up earnings. We're likely to see a 20% growth in earnings in the United States alone just in 2021, and it's expected to be in high double digits into 2022 as well. So with that amount of growth in the market, we'll see volatility. Don't get me wrong, we will still see volatility, but as far as steady growth goes for 2021 and 2022, it's still looking very strong. Now, on top of that, those stimulus packages that are out there, there's $5 trillion globally on the sidelines that has not been spent yet. So that's a lot of capital to flow into those markets that have been waiting for the reopening. So when we talk about, yes, we've seen a surge up on the reopening expectations, but there's still a lot of growth to happen as we actually go into reopening. And we're going to talk about how that's going to look a little bit different. And then, of course, the last aspect there is the vaccines. And of course, that's moving along well ahead of pace in the developed countries. Most of the developed countries will be reopening completely in 2021 because of the vaccine. We mentioned UK, the US, Canada, all above 70%. And I talked about those 12 billion doses just in 2021 alone getting out to the globe. So all that is very positive for an actual reopen in this year. Now, what should we expect and what should we invest into? Cyclicals versus growth. This has been an ongoing debate rather. I've talked about this many times in these videos, growth versus value, small cap versus large cap, technology in different sectors. The truth of the matter is, if we look backwards, growth has dominated 2019 and 2020 and part of 2018. It's beat out the value stocks hands down. But I think there's the two sectors mostly driven in there is tech and healthcare, especially in 2020. But there's no one out there is saying that they're going to continue at that pace. It's pretty much consensus that value is going to take over as we reopen. Because remember, we have this big surge, all those big numbers, the March numbers, the manufacturing numbers in March, and into April. And now they're starting to stabilize. Now we're going into real economic growth, and that's what we want. We wanted to get through that surge into real economic growth, and that's where we're now seeing, where we're going to see it: energy, materials, industrials, financials. Those are your value sectors. Those ones are going to start. That have already started to move, and that's where we're going to see the money flow. Infrastructure is in there as well. That's where we're going to see the real economic growth over the next year or two. And that's where you should don't move completely away from growth. We talked about that, value versus growth, but definitely start building that side of the portfolio and start to overweight that side of the portfolio. Now I want to talk in there ESG, or environmental, social, and governance stocks or equities, because it's been big. We've covered it as well. And it's going to continue to be a long-term trend, but it's not going to be the short-term trend. Don't be afraid if you see a little bit of lag in the growth. It had a good 2020. We're probably going to see a little bit of lag in that sector in 2021 as money flows into those other areas. Based on the reopening. Energy being a great example. You've heard me talk about the long-term outlook on oil and gas and fossil fuels is a net losing game. It is a shrinking industry. Technology, green tech or green energy is taken over only because for a lot of reasons, but the main reason being it's more cost effective now. So industry is going to shift over, but it's going to take a little bit of time. The surge, that reopening surge, is going to happen in the oil and gas sectors and in the fossil fuel sectors, because that's where it's going to get hit first. The green tech is going to take time. So if you're talking long-term, yes, absolutely, ESG is a theme you should have in the portfolio. If you're talking shorter term, cyclical is where we're going to see the bigger short-term moves. And that goes to hospitality, hotel, travel, all those things, as well as the economy reopens over the next little bit. That is a global theme that's not centered on Canada. We're seeing the numbers the same around the world. It's very rare we get the synchronization, but of course it's very rare the globe goes into a pandemic. About the only economy that's off of that would be China, which went into a recovery earlier, because of course they went into the pandemic earlier. But we have seen this lag in emerging markets. But as the developed markets start to surge, we will see that surge follow in the emerging markets as trade picks up and as we normalize the economic levels. So with that, that's all I have for you this week. As always, go to mikeonmoney.com to see all this, the replays and all our other videos, and send us your feedback. Otherwise, I will see you next Tuesday. Oh, and keep in mind, we are still putting out our crypto series. Part 1 and 2 are out. Part 3 is coming out next Monday, if you've been following those. Thanks very much, everyone. Take care. Talk to you again.